Hey, I hope you're having a fantastic day today. Today I want to discuss a few things about what's happening in the real estate market, why it's happening, and what we can expect from the future. Because a lot of people recently have been saying, well, I'm just going to sit on the sidelines and wait for a crash. It happened in '08, it'll happen again. So we're going to talk about what today's real estate market looks like, why it looks like that, and how you can approach the market. If you need to do something in real estate, we're going to talk some strategies as to how to do that. Before we get started, please like and subscribe, share this video. Somebody in your network is probably in the market for a home, and there's some great information in here that could possibly help them get into the home sooner rather than later. So, generally speaking, today's market, if you own a home, you've made a lot of money recently. If you're looking to buy a home, you've probably been pretty frustrated recently. The reason being is because for the last 11 years or so, ever since the recession, our building community, our building industry has not kept up with the pace of demand. During the crash, we had a flood of foreclosures hit the market. These were properties that were occupied by previous homeowners. And when that happened, guess who came in? Wall Street. Wall Street came in and nabbed them all up. Investors nabbed them up. So fast forward to today, all of those homes were taken out of the market by investors, and they're still held by investors. So the rental market is great. And oftentimes it's a lot easier to find a rental than it is to find a home right now, because builders have not kept pace with the demand that we need. We're actually, according to our chief economist for the National Association of Realtors, we are about 11 years behind where we need to be in terms of housing supply. We've got very little supply. There's a lot of buyers, but very little homes to choose from. When you match that with extremely low interest rates, we have a lot of people now that want to buy because it's affordable. The monthly payment on a $300,000 home is at an all-time low. So a lot of people want to buy, and very few people are selling. And this was actually amplified in the pandemic, when a lot of people started working from home, staying home, and selling less homes. So the competition as a buyer has exponentially increased. It's much harder. The statistics, 3 years ago, on average, a home received between 5 and 8 showings before it went under contract. Now, a home is receiving between 16 and 20 showings before it gets under contract. So there are more buyers in competition. And as an office, we have seen 7 to 10 offers per home coming in before it goes under contract. So you are competing as a buyer with about 10 other people, and in some cases 20 or 30 other people per property to try and negotiate that deal. What's that mean? Well, we're going to talk some strategies a little later as to what you need to do in order to be successful. But for now, let's just talk about where we are as a market. In the past, in the recession, when the real estate market tanked, it was because people couldn't afford to live in their homes. And right now we're seeing that we do have a high rate of default right now, but those are not transitioning into the foreclosure stage. So just because a homeowner is in default because of something pandemic related does not mean that that's going to become a foreclosure. And if a home does become a foreclosure, we can expect that that's going to only fill the void, right? With our supply very low, if we get 1,000 foreclosures on the market tomorrow, it's not going to dip prices. What it's going to do is it's going to alleviate the competition that buyers have. To me, that a foreclosure wave would actually be a welcome thing to have in our market, because it's going to mean that we can place buyers in more homes. We have about 30 buyers that our team is working with right now that are just waiting for the right home, and they're constantly bidding, working to try and find that one for them. So if foreclosures hit, we can expect that they are not going to dip prices. What they will do, possibly, is slow down the speed at which prices are climbing and move us more towards a balanced market. When we're talking about buyer's markets, seller's markets, or neutral markets, in real estate, we use the term months supply, which means if we don't put a single home on the market today, how long is it going to take us to sell every single home that's available right now for sale? And in my entire career, I've never seen that go below 2.5 months supply. In the pandemic, we dropped to 1 month supply, 1.1 month, which is extremely low. Anything under really 4 months is considered to be a seller's market, with 6 months being the balanced market and 9 months being a buyer's market. So it's talking about how many homes are on the market right now. And in the metro Atlanta area, we're hovering around 7,000 homes that are available for sale. A few years ago, we had 15,000 homes that were available for sale at the same time. So basically, we are at about half of where we used to be just a few short years ago in the terms of homes to choose from. So if your goal is sitting on the market waiting for a crash, you're probably not going to see that. All that you might see is a little bit of reprieve from some of the homes just by getting more on the market, okay? So now that we've covered that, there's not the likelihood of us getting a real estate crash is minuscule, okay? Now, when it comes to finding that house, you're competing with a lot of buyers. So what is the type of financing that you go for matters. Your contracts matter so much right now. So what we're seeing for winning bids on offers, we've got some strategies, and I'm going to talk about some strategies that are free and low risk, and then we're going to go into more of the more expensive strategies and higher risk strategies in just a moment. So to start off with, the free and low risk strategies. Being the first. If you're the first in the house and you offer them everything that they want, then there's a good chance that, well, it's not a good chance, but it's a small chance that seller will say, okay, I don't think we're going to get better. Let's just take the first offer that came in. Additionally, you can structure a deal so that the seller is getting what they want. As an agent, one of the first things that I do if a buyer wants to win a house is I call the listing agent. And I ask the listing agent, and you'd be surprised at how few people do this. I ask the listing agent, I say, what's important to the seller in the offer? Is there anything outside of just finances that matters to them? And I was able to place a family earlier this year in a gorgeous house that was priced well below our market because of the circumstances surrounding it. The house was a fire, it was burnt down, and the family, it was being sold by an estate. So somebody had actually passed away in the house, and the house was now brand new. There was one section of the house that was original, the rest of it was all new construction. And when I talked to that agent, I asked her, I said, well, what is important to the seller? And she told me the story. So one of the things that we did outside of just the terms of the contract was to make a commitment and set the expectations that we would treat her seller with empathy. We knew that it wasn't an easy time for that seller. So we wanted to make sure that she knew, look, if there's something wrong with the house and we find it in the inspection, we're going to ask the builder to fix it. And if the builder doesn't fix it, we're going to be fine. Otherwise, we don't want to cause any stress for you during this period. Taking that empathetic approach, we were the first showing in the property. We showed it listed at in the evening Friday night. We were in the property at 9:15 in the morning on Saturday morning. We went in. Our offer had no contingencies. It was above ask. We did have an appraisal contingency, and we did have a financing contingency period, but they were extremely shortened. Our financing and appraisal were both 2 weeks. From there, we offered a short due diligence of about 5 days, and we made the offer something that it's hard to beat. So when we did that and we expressed empathy and we worked with that listing agent to make sure that the seller's time selling the house was going to be as easy as possible, that was a win-win scenario for them. I won for my client, the seller won, and that they were able to sell that home without dealing with much headache. They didn't have a buyer give them a bait and switch. They didn't have the buyer come back and ask for the moon during inspection period. It was basically a new house. And because of that, our clients were able to get in, win the bid, and get it off the market within a few hours of it coming on the market for sale. So that gets me into, being a little bit more risky, and that's your contingency period. So in a real estate transaction, we have in Georgia a due diligence period, and we typically have both a financing and appraisal contingency, meaning that the buyer has to get their financing in order, and if they don't, they can terminate penalty-free under certain exclusions. And then under the appraisal, it's to make sure that the property is actually worth what the contract price is, because the bank doesn't want to lend money on a property that's not worth the appraised value. So what we're seeing in the market right now is that buyers are offering an appraisal gap coverage, meaning if we write an offer for $300,000 and the property does not appraise for that value, say it appraises for $290,000, then an appraisal gap assurance would say to the seller, hey, I'm the buyer, and if it doesn't appraise for full value, I'm going to pay you X dollars over the appraised value. That might be $3,000, it might be $5,000, it might be $50,000, depending upon the price point of the house and the level of competition. So that becomes a little bit more risky for the buyer. It does require a little bit more expense, but that's something that a lot of buyers are using right now to win bids. Another thing that buyers are doing to win bids are escalation clauses. An escalation clause says, I'm going to pay you $1,000, $2,000, or $5,000 over the highest bid you receive on this house. So if 20 offers come in, I'm going to give you $5,000 over the highest offer that you receive, subject to appraisal, or maybe subject to an appraisal with a guarantee of a payment over the appraised value. Sometimes they're not even putting an appraised value in, and the seller or the buyer is willing to take the risk that they will come out of pocket for the difference. That becomes much more risky, but when your finances allow you to do that, that makes sense because it's going to win you the house. In a lot of circumstances right now, buyers are frustrated. They're putting in offers and they're getting denied because of the type of financing. As a seller, the seller is going to discern themselves against the buyer's credit worthiness and how strong of a buyer they are based off of the type of financing that they go through. Typically, the way that properties are, or a seller is going to look at financing, or an agent is going to look at financing to present to their seller, would go cash being the strongest, a conventional loan being the second strongest, even if it's a low down payment conventional loan, because in a conventional loan, it's going to have the highest credit requirements. In third place, you're going to find the FHA loan. FHA and maybe USDA. USDA is a 100% finance loan that is usually used in rural programs. The other program that comes up a lot is a VA loan. Now, the issue with a VA loan, and we are a veteran-founded company, so I hate to see this happening in the market for our veterans, but when a buyer goes in with a VA loan, because of the way the program works, the seller does not know how qualified the buyer is. The buyer could have 800 credit, or they could have 650 credit, and there's just no way to know because it's a 100% down payment program. And unless the seller has some affinity for veterans, it does not present itself as strong of a financing position as a conventional or cash loan. So for the most part, most homes right now are winning bids at either a cash financed offer or a cash backed offer, or their winning bids at a conventional loan. And the higher the down payment you put on your financing contingency, the stronger you look as a buyer. If I'm a seller, and I know a lot of you feel like this is not fair, but if I'm a seller and I want to make sure that when I put my home under contract, it's going to get to the closing table. Because if I'm a seller, I'm making plans based off of me selling this house. I'm booking trips, I'm scheduling a move, I'm putting my own house under contract that I'm buying. So I want to make sure that I'm not going to have any hiccups based off of this buyer's financing and missing the closing date. Because if I miss the closing date, it's going to put a big wrench in my plans. So a seller is approaching the deal from that position. So the stronger you can make your financing, the better off you are in negotiations in today's market. I know a lot of you are thinking, but I don't want to come up with the extra 1.5% down to do conventional 5% versus an FHA 3.5%. I get it. It's a tough decision to make. But if you can qualify based off of your credit for a conventional loan, you are going to appear as a much stronger candidate to any seller out there today. Now, another thing that buyers are doing right now is they are reducing their due diligence time. So the due diligence is the period that you have to inspect a property and find out if that is the one that you want to buy. In due diligence, you can terminate that contract for whatever reason. So if your due diligence in the past was 7 to 14 days, today you're looking at 5. 4 to 6 days really is a common due diligence time frame that we see on winning bids for our contracts. And we review a lot of offers that come in as an office and put them into spreadsheets to teach our agents how this happens. Now, what does this mean for you? Now, if you have either purchased a home maybe 5 years or longer ago, or you're new to the home purchase process and you have some parents or family friends that are kind of coaching you through this, then what was good for them when they bought is not what's happening today. And we're seeing a lot. I'm seeing this from my agents. I have 100 agents, and I am seeing these agents come to me saying, how do I handle this? This buyer is being told by their parents that they need to negotiate aggressively in the contract. Winning the bid is getting the deal in today's environment. And that is really hard to swallow. It's a big pill to swallow. To think, I'm going to pay you $300,000. I should get something in return in this deal that I want as the buyer, and to not be able to get that. To basically give in to the seller's every whim on the house. The deal is, here's the magic thing. In today's market, the deal is getting a house today. Because you are going to make the financial growth over the next few years until the growth slows down. So in America, we have a widening income gap. The middle class is basically shrinking. The average net worth of a renter, somebody who just rents a home, the average net worth, which net worth is all of your savings minus all of your debts, right? All the money that you have in the bank account versus what you owe. The average renter's net worth is $5,000. Now, the average homeowner's net worth is just at $200,000. If you own a home today, you are going to get that price appreciation, right? If you buy a $200,000 home today, if you can find one, in a few months, that home is going to be worth more, and in a couple of years, that's going to be worth way more. So if you can get into a house today and just live there, doesn't have to be the dream house, but if you own real estate and you're paying yourself and not a landlord, then in a few years when you get ready to sell or to put a tenant in your property and buy the next one, you are going to be in a much better financial position. If you earn, $50,000 over the next few years just in price appreciation, you buy a house at $300,000, in a few years it's worth $350,000. Now, when you go to sell that at $350,000, you're getting that $50,000 minus expenses that you can use in addition to your savings to buy your next home. So maybe your next home is then the dream home. Maybe it's the home that you wanted and you didn't have to set aside all of that money out of your hard-earned income every year from your job because the market helped you. Just by paying yourself, by owning a home, you've been able to ride that wave. Now, if you're a renter and you don't own a house and you're not planning to buy soon, then you're missing out on all of that price appreciation. So the best thing that you can do in a financial term is to bring yourself to a position where you can buy a house, even if it's a modest one. Buy the house, live in it, and then make that your starter home. Because that home is going to start you on the path to financial freedom and retirement one day. I say this as a former registered investment advisor. I used to be a financial planner before I got into real estate. And I have a degree in finance from the University of Georgia's Terry College of Business. So I've lived this. I've purchased homes since I was in college. We have a few of them that we rent out. And that money, I have equity that's appreciated in those homes. So when we're getting ready to plan for future investments, we can then tap into that money to make more future purchases, whether that be a bigger house for us to live in or another house that we want to purchase as an investment. So there's a big avenue here for home ownership. But when it comes to negotiation and winning a bid in today's environment, because nobody likes to lose. Absolutely nobody likes to lose, which is why you need to work with a winning agent and winning team. And when you're putting the bids in, you've got to be competitive. And if the better you can position yourself in the financing, going conventional or using a cash-backed loan or offer, that's going to make it so that you can win more offers and get the better pick of homes that are on the market. So if you have any questions, I'm going to wrap up this video. It's getting kind of lengthy, but this is an important video for you to know so that when you're getting out there and you're trying to buy a house and you're trying to build your finances or your financial foundation for the rest of your life, this is a great way to do that. But now you understand a little bit about what's happening in the market. We're not expecting a crash. If you're looking to buy a home right now, getting the home is the deal. You're not going to get closing costs. The seller's not going to agree to that. You're not going to get any special stipulations. You're not going to get, any special requests in most contracts right now. If you can find a property that's been on the market for a while, that might be a fixer-upper, then there's an opportunity there for you to ask for those things. But in most contracts today, you're giving full price or more. Many of the winning offers that are coming in on our listings are $15,000 to $25,000 over ask in the Metro Atlanta area without appraisal contingencies. We even had one that came in that was $50,000 above ask with no appraisal contingency because they loved the home that much. That's a lot to ask for a lot of people that don't have the financial means to do that. But through our coaching, we can help you get to a point where you're going to be as strong as you possibly can, and then we can work with you to get you on the path to owning a house. If you're not finding what you want where you want, then sometimes you've got to look a little bit further out. We're seeing a lot of new construction on the fringes of Metro Atlanta. We're watching urban sprawl happen as the Atlanta market is moving further and further out. We're seeing rapid growth in Cherokee County, we're seeing rapid growth in Paulding County, and we're seeing rapid growth in Bartow County, which are counties that historically have been less populated. And now we're seeing a lot of development, a lot of new construction, which is another option to go in the new construction route instead of waiting on bidding wars for the resale market. I'm Chris Lazarus, owner of Select Realty and lead at the King and Archer team here at Select. If you have any questions about real estate, please feel free to reach out. My email is chris@hshbrands.com, and I'm happy to help in any way, shape, or form that I can. I hope you have a wonderful day, and I hope that this video helps to explain some of the nuances happening in today's real estate market. Have a great day.